Hey, what's up guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. If you want 6 free stocks, Webull is going to give you 6 free stocks when you open a new Webull brokerage account. Put at least 1 penny in that account. They're going to give you 6 free stocks valued all the way up to $12,600. So after the video, I want you to go down to the description box of the video. Click on that Webull link. Open up your new account today. Go get that free stock. Go get that free money. Well, guys, the stock market towards the end of last week had a couple of really good days. I saw my portfolio for the first time in over a month actually go up, which was a pretty nice thing to see. But I hate to tell you, it was just temporary because the market is nowhere near ready to recover yet. When I say the market, I'm talking about the stock market. And here's the reason why. The Federal Reserve has came out strongly saying that they're going to continue to raise interest rates aggressively until they can get inflation down. See, inflation is out of control, guys. It's at 8.5%. And the Federal Reserve understands if they do not decrease that downward, then we're going to be in a world of trouble from an economical standpoint here in our country. So they're going to do whatever they got to do to continue to push inflation down. Bad news for the stock market is when inflation is that high and the Federal Reserve has to increase interest rates to push it down, that hurts the stock market temporarily. See, when interest rates are too high, guys, as I've stated in other videos, companies and consumers do not borrow money. And if companies and consumers are not borrowing money, then guess what? Our economy slows because people are not spending. And when people are not spending, companies are not growing, right? If companies are not growing, then our economy suffers. Our stock market suffers because investors, they want a return on the money that they put in the stock market. And unfortunately right now, with companies not being able to borrow money cheaply so that they can grow and expand, and with consumers not borrowing money to buy things they really don't need, because you got to understand, guys, our economy is made up of 70% consumer spending. So if people are not buying stuff, our economy is slowing down. Our economy is shrinking. And that's not a good thing for our economy. It's not a good thing for our stock market either. So although we had a couple good days last week, which I'll take, I understand it's temporary. Another thing you got to be thinking about out here is what's going on with real estate. Well, if you've been paying attention, guys, real estate prices are starting to come down. I'm looking at my own area here where I live, guys, and I'm starting to look at properties now where sellers are starting to reduce their asking price. Why? Because their property is staying on the market longer. There are fewer buyers. See, that increase in interest rates by the Federal Reserve, although those are short-term interest rates that they're increasing, and really what they're increasing is the rate or the interest rate that banks borrow money from each other, right? It's called the Fed funds rate. That rate is a short-term interest rate. Those are going up, but what's happening is it's also forcing long-term interest rates. And when I'm talking long-term interest rates, I'm talking about mortgage rates. See, when people are looking to buy a new home or downsize a home and buy a new home or first-time home buyers, most of these people, guys, cannot pay cash for a property. Most of us can't do that. We got to go get a loan. Now, when we try to go get a loan, instead of it being 3% fixed for 30 years, it's almost 6% fixed for 30 years. That's a huge, huge jump in your monthly mortgage payment from 3% to 6%. Huge. And people are not being able to qualify to buy a new home, which is hurting existing home sales. And that's what's happening right now with real estate, in my opinion. That's what I'm seeing in the market that I live in here in Southwest Florida, guys, is people are starting to have to reduce their asking price. Let's talk about what does this bear market in the stock market and this falling real estate market mean for us as investors and for people who are trying to grow their wealth. Well, I will tell you guys, this is the perfect opportunity, right? Especially for the stock market. This is the perfect opportunities to be buying these companies, your favorite companies, to be buying your favorite ETFs. I'm going to preach this every single day, guys, till the cows come home, because I do not want you to miss this opportunity to build your wealth, right? Everything is on sale in the stock market. And again, it's going to continue to be on sale until what? We see inflation start coming down. That's the kicker, guys. That's what you want to hang on to. That's what you want to be looking out for. As long as inflation is 8.5% and the feds continue to increase short-term interest rates to try to push it down, the stock market is not going to recover. We may have a day or two where it gives us some nice bounce back, but it's not going to be a permanent bounce back. It's going to go right back down to be in a bear market again, in my opinion. Why? Again, investors. See, institutional investors make up 75% of investors that invest in the stock market. People like you and I make up about 25%. So anytime these big institutional investors pull their money out of the stock market to put it to safety because they're not sure what's happening with the economy, they're not sure what's happening with inflation, they're not sure what's happening with the recession, they take their money out, guys, and they put it over here where they can get a safer return on it and keep their customers' principal safe. See, that's the key though, is inflation. Keep an eye on inflation. But until inflation starts coming down, guess what we should be doing? Since the stock market is going to continue to be on sale, we should be buying. We should be buying every single day, every single week, every single month. Our favorite companies, our favorite ETFs, our favorite index funds, and our favorite cryptos. Right? That's right. Crypto is going to be down too. Yeah, I see Bitcoin starting to try to make a little move. Temporary, guys. It's not going to make a move. Why? Inflation's too high. Inflation is too high. It's not going to make a move until inflation comes down somewhat, or we get some news from the Federal Reserve that says, you know something, us increasing short-term interest rates is working. Inflation is starting to come down. That's when you're going to start seeing things move again in the stock market, right? So, but until then, we need to keep buying. Why? Because we're buying low, guys. We're buying low. We just want to buy low. Buy low. Keep buying, keep buying, keep buying. And then when this thing turns around, which it will, because it always does, right? The stock market always bounces back and hits all-time highs. It does it all the time, guys. It's done it many, many times throughout the history of the stock market. It will do it again. But until it does, you should be buying low right now. Don't be trying to time the market. Don't be trying to sit back. I don't think it's the bottom yet. I'm going to continue to wait, guys. When someone says it's the bottom, when you hear people on TV start talking about it, we're at the bottom, it's too late. The recovery has already started, right? So what you should be doing is not waiting for the bottom. You should be investing right now. Right now. Dollar cost averaging in every single week, every single month, right? You should be doing that right now. And a great platform to use to do that is the Webull platform, guys. Right? Why? Because you can make fractional share trades. I can take $5 and buy a fractional share of Apple. I can take $5 and buy a fractional share of Amazon. I can take $5 and buy a fractional share of Facebook. I can take $5 and buy a fractional share of Vanguard S&P 500 VOO. Guys, hit that link down in the description box and open up that new Webull account today and get and be a part of this $5 a day challenge that me and my subscribers currently are doing right now. Be a part of that $5 a day challenge where you're taking $5 every single day and buying your favorite companies, your favorite ETFs, and your favorite cryptos, because you can do fractional share trading with that Webull app. So if you're interested in that, click on that Webull link down in the description box. Go get that free stock and go get that free money. If you're stopping by the channel for the first time, guys, please consider subscribing, share the video, smash that like button. Thoughts become things. You can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'll catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.